I'm going to take a look at Plum, the money app designed to automate your savings and investments. I'll cover its main features, the different plans available, and how it measures up against its main competitors. Now, there is a full article on the Money to the Masses website, which I will refer to. There is a link in the notes below this video, so you can go through and read it at your own leisure. But it is a far easier way of comparing some of the features that Plum offers because its website is a tad confusing. So first, let's break down Plum's product offerings. The app connects to your bank account and uses artificial intelligence to analyze your spending, automatically setting aside an affordable amount of money for you. Now, the amount saved can be adjusted by setting a mood, with the application allowing you a range from shy to beast mode. Plum also provides a suite of financial products. For savings, you've got the standard primary pocket and also the easy access interest pocket. Although it's worth pointing out that the primary pocket does not pay any interest and the money held within it is classed as e-money with Plum, so it's not protected by the Financial Services Compensation Scheme. However, money held in Plum's easy access interest pockets are protected by the FSCS. Now, Plum also provides a cash ISA with a competitive interest rate. I'm not going to go through the rates on the video because they do change, so I'll put a link in the notes to the review on the Money to the Masses website so you can check the rates that are current. And there is also a lifetime ISA that has a competitive rate as well. Now, for investors, the minimum investment amount that you can invest is £1. The available accounts are stocks and shares ISAs. You can have a general investment account, a self-invested personal pension, also known as a SIP. The investment selection consists of 26 funds, which includes incredibly popular Vanguard Life Strategy range, which are presented under simplified names like Slow and Steady. The Plum SIP enables the consolidation of existing pensions and offers investment funds from providers including Vanguard and Legal & General. You can also invest in over 3,000 stocks with Plum. On screen, you can see the Money to the Masses full review from the website. The reason I'm pulling this up is because the features that you get with Plum are determined by the plan that you pick. Now, the Plum accounts are shown here, the various different plans with a range of different costs. The Plum basic plan is free and gives you access to automated savings tools and a general investment account. To access more products like the stocks and shares ISA, you need to subscribe to a paid plan. Now, these start with the Plum Plus plan at $3.99 a month and go up to the Plum Max plan at $11.99 a month. These tiered plans unlock lower investment fees and additional savings features. On screen, you can see a good summary of the different features. So again, there's a link in the notes. You can go through and look at that at your own leisure. Like I said earlier, it's very difficult to find this on the Plum website and app. When it comes to investing, the charges are made up of three parts. You've got the monthly subscription, you've got the Plum platform fee, which is between 0.15% and 0.6% a year, and then you've got the separate charge from the underlying fund manager. Subscribers on the Boost and Max plans can also order the Plum card. This is a Visa prepaid debit card that can be loaded from your savings or linked to a bank account. Its main benefit is offering fee-free spending while you're abroad, as you will only pay Visa's daily exchange rate. Plum also regularly runs offers for new customers in the form of cash incentives, and the best of them you can find in the description below this video and in our full review on the Money to the Masses website. There are, of course, plenty of other savings and investing apps out there which do similar things to Plum. So, for example, you've got Chip, which also uses AI to automate savings, while Moneybox helps you start saving and investing by rounding up your spare change. Moneybox charges a £1 monthly fee plus 0.45% as a platform fee a year for its investment products, which means for most small investors, Moneybox will work out cheaper than investing via Plum once you factor in Plum's plan fees. Even cheaper still for many investors would be Bell Dodl, which is another investing app, which has a low 0.15% annual platform fee, although it does have a minimum fee of £1 a month. Unlike Moneybox, which has a higher platform fee anyway, the monthly fee is not in addition to the platform fee, it's a minimum fee. So if the platform fee is at least the amount of £1, then you won't be charged that monthly fee, if that makes sense. However, Plum does let you start investing with just £1, while platforms like Bell Dodl require a lump sum of £100 or a £25 a month contribution. Other investing platforms or apps out there include the likes of Freetrade, which focus on commission-free stock trading and use a monthly subscription model for their ISA and pension accounts, with plans starting from $5.99 a month. Then you've got robo-advisors like Nutmeg and Wealthify, who will manage your investments for you, but they require a higher minimum investment of £500 to get started. To make the comparison easier between Plum and its competitors, I've come up with a few hypothetical scenarios so you can see where you might lie. So scenario 1, if you are a beginner saver. Now this scenario considers someone with no initial lump sum who finds personal finance complex and requires an automated solution to begin saving. So for this person, Plum's AI-driven savings function is pretty good. An alternative could be Moneybox, which uses that roundup function where it rounds up your spare change when perhaps you go shopping and invests that money or saves it for you. An app like Bell Dodl with its £100 minimum investment is less suitable for this kind of person, so either Plum or Moneybox would be a good option to look at. Now, for scenario 2, it's somebody who's cost conscious and they are an investor. So they may be someone with £10,000 as a lump sum to invest in a low cost tracker fund, for example, whose primary goal is to minimize fees. So on Plum's Max plan, the annual subscription is nearly £144, plus you've got the 0.15% platform fee. By contrast, AJ Bell would only charge its 0.15% annual platform fee for an investment of that size, which amounts to £15 a year. Plus, you've obviously got the underlying fund fees, which are similar across most platforms. So for this person, AJ Bell Dodl would be more appealing from a cost-effective position. The next scenario is somebody who's an active stock trader. So they may be someone who wants to build a portfolio of individual shares in companies and they want to trade them regularly without incurring high dealing fees. Now, Plum offers a range of around 3,000 shares and charges trading fees on 3 of its 4 plans. So you've got to bear that in mind. Platforms such as Freetrade are designed for this purpose in mind of trading regularly in shares. So Freetrade offers a commission-free trading platform for a flat monthly subscription fee if you want to do it within an ISA, and that starts at £5.99 a month. This model is better suited for active stock traders than Plum's platform. Better still, perhaps you might want to look at Trading 212, which doesn't even charge a platform fee if you want to invest via an ISA, and it has lower FX fees than Freetrade if you decide, for example, to invest in shares from the US. The final scenario I'm going to look at is somebody who wants to be just a hands-off investor. So they may have a significant sum to invest, let's say £20,000, but they lack the time or interest to manage their money themselves. So they want somebody to do everything for them. Now, this profile requires a fully managed service, so DIY platforms like Plum or Freetrade have limited options that are actively managed, unlike a robo-advisor such as Nutmeg or Wealthify. These services help assess a user's risk profile, and then the robo-advisor manages a diversified portfolio on their behalf. Their £500 minimum investment is not a barrier for this particular profile, and their straightforward management fee provides the required hands-off experience at a reasonable cost. It's not the cheapest, but it is reasonable. However, when it comes to investing, the optimal platform for a person is always going to be determined by their user-specific factors. I've only included a handful of competitors in this review to keep things simple, but there's a link in the notes to an article on the Main to the Masses website and a video on the best stocks and shares ISAs out there. Ultimately, Plum is good for someone who wants automated savings. The likes of AJ Bell Dodl and others are more cost-effective for larger self-directed portfolios. The likes of Freetrade and Trading 212 are specifically designed for active stock trading, while robo-advisors like Nutmeg target investors seeking a fully managed service. So for each of those different profiles, they may or may not be that attracted to Plum. In summary, Plum is a strong contender if you're looking for an easy automated way to start saving and investing. It's particularly well suited for beginners who find traditional platforms intimidating. However, the multi-layered fee structure, which combines a monthly subscription with platform and fund fees, can become costly for those with small investment portfolios on the paid plans. Also, money held in the standard primary pocket is not protected by the Financial Services Compensation Scheme. Additionally, some of the features that require a paid Plum subscription are actually offered for free by its competitors. For the most current and detailed information on Plum and a full review, do go to the Money to the Masses website. If you found this useful, make sure you hit that like button, but also subscribe to the channel.